What's up, everybody? Welcome back to another episode of the Fundamentals of Investing podcast. We did it. We finally did it. We got approval from the OCC for SoFi Bank. We got the bank charter. We've been talking about this for months and months and months. It came a bit later than we were expecting in November, but better late than never. January was actually my next milestone, which I highlighted in my previous video that I thought that the bank charter was going to be coming in. In this video, I'm going to be talking about what comes next, what the bank charter means, what it unlocks for SoFi, and several reasons why the market is not at all pricing this in correctly. Let's jump into it. So first, let's just skim through the press release and see what we can find in here. The OCC today conditionally approved applications from SoFi to create SoFi Bank as a full-service national bank headquartered in Cottonwood Heights, Utah, which we talked about this in a previous video as well. SoFi Bank will acquire Golden Pacific Bancorp, a national bank insured by the FDIC. Upon consummation of this transaction, SoFi Bank will have $5.3 billion in total assets and $718 million in capital at the end of the first year of operation, and will continue to offer a range of local commercial-focused loan offerings and deposit products previously offered by Golden Pacific. The bank will also provide a fully digital, mobile-first national lending platform for consumers across the country. So the first point that I want to highlight is this $5.3 billion in assets and $718 million in capital at the end of the first year of operations. The second point that I want to highlight is this line here, which states the conditions imposed require specific capital contributions, adherence to an operating agreement, and confirmation that the resulting bank will not engage in any crypto asset activities or services. And the acting comptroller of the OCC highlighted here in a statement that this levels the playing field and will ensure that SoFi's deposit and lending activities are conducted safely and soundly, including limiting the bank's ability to engage in crypto asset activities. This came after hours last night on Tuesday, and a lot of articles that came out that said that SoFi will be blocked from crypto transactions. We're going to dive into that as well into this video. But first, I want to go through some of the positives here. So this is why this matters, because SoFi Bank is estimated to almost double the EBITDA for SoFi. As you can see here, the adjusted EBITDA expectations for 2022 are $254 million. But with SoFi Bank, the impact increases it to the point where with the bank charter included, they foresee their EBITDA being $447 million for 2022. This is still an expectation, but this matters because profit margins were a concern and a potential bear case for SoFi in 2021. With the bank charter, the adjusted EBITDA will almost 2x in 2022. Of course, 2022 impact is going to be the biggest tailwind for the company because of this split. It's almost a 2x. But in every other year, you will have more adjusted EBITDA with the bank charter than without it. So the top line for SoFi, the amount of money that they get in the door, the amount of profit that they essentially get, their earnings will increase as a result of the bank charter. It's absolutely super bullish because now they have a lower cost of capital. They can borrow for much less, and they have their increased growth in their lending segments. They can hold loans for longer, and they have higher durability as a nationally chartered bank as well. So this company is going to be doing really great things in terms of their top line growth. And this matters because SoFi is super cheap. It's at a deep discount. A chart here from David Marlin from Marlin Capital highlights that the growth adjusted valuations in the fintech or the high growth payment space. And from this chart, we can see that SoFi is absolutely the cheapest, with a couple of other companies in the fintech space that it's highlighted here that they're comparable. But I think SoFi has a lot more to offer than a lot of these companies. But this takes into account the 2-year growth rate, the compound annual growth from 2021 to 2023, but it does not include the charter growth acceleration. So SoFi is going to be growing so much faster. And when you take into account what they're trading at right now, I mean, the stock is down over 50% from its all-time highs. It's down about 40% from its recent highs back in November. And it's been trading at 52-week lows just before we got this bank charter news. It fell all the way down to like $12. Absolutely ridiculous price for SoFi to be trading that low. Now that we got the bank charter news, the acceleration in terms of their top line, in terms of their revenue growth, will make them even cheaper, even more at a discount than they are before because they're growing so much faster now as a result of this news. So what does this mean? Well, the first thing that it means is that upgrades are coming. Wedbush came out yesterday, and whether they had insider knowledge or not, I don't know. But they came out and initiated SoFi at an outperform rating with a price target of $20. If you aggregate all of these findings, you'll see that SoFi has 7 buy ratings and 3 hold ratings with 0 sell ratings. So it's a moderate buy according to tip ranks. And the average analyst has them at $21.4 price target. So if you take all of these numbers and you find the average of them, it's 21.4. And that alone reflects a 77% upside from when I took this screenshot last night. So this is all without the bank charter. Now, the bank charter is almost going to double their adjusted EBITDA. So you can imagine all of these analysts now are going to come out of the woodwork and upgrade their price targets. Maybe they go from 20 to 22, from 22 to 24, from 24 to 26. I don't know how much they're going to upgrade it by, but one thing is for sure that they're all going to upgrade it because SoFi is now expected to do so much more money now that they're formally recognized as a national bank. So upgrades are going to come. And what you have with upgrades is you have the stock appreciating in value because all of these analysts are essentially backing the stock. The second interesting factor is the timing that this happened because Super Bowl is around the corner. And I know that there's been a couple of news pieces around COVID-related precautions for the Super Bowl. They at one point discussed not having the Super Bowl at SoFi Stadium, but that idea was quickly backtracked and now it's for sure going to be happening at SoFi Stadium. And Anthony Noto, their CEO, just last night after they got their bank charter, highlighted that this move, this important step, allows us to add to our broad suite of financial products and services that the bank charter is important because they can add to their suite of financial products and services. So think about it like this in terms of the timing. The bank charter unlocks new product lines for users. SoFi is going to come out with new products, with lending products, with products that they couldn't come out with before because they didn't have the charter. They weren't recognized as a bank. But now that they are recognized as a bank, they can do all kinds of things in terms of the lending segment for their users. So there's going to be more product lines, more lines of business where SoFi can earn money. Now, Super Bowl is a huge event, and SoFi Stadium drove over 500 million TV spots last quarter, over 20 million TV viewers per game in the last quarter. Anthony Noto highlighted this in their latest quarter earnings call. Super Bowl 2021 viewership was about 96 million. And although that was the lowest in the last several years, this year it's expected to be bigger, and that's still 5x their normal TV viewership per game. Not to mention that they have a huge halftime show, that they have so much going on in that stadium. You can just imagine SoFi introducing new products at that event specifically, and overall having a huge brand awareness. So all of a sudden you have the bank charter where they have unlocked the functionality to introduce new products, and you have the Super Bowl, which is their biggest marketing campaign of the year in terms of eyeballs onto their brand. You mix all those together with this really interesting timing of when this news broke. Some of the long tail benefits looking further out is that this sets SoFi up in a really good spot to enter the S&P 500, right? Because these are the eligibility criteria as highlighted here by Stock Meetups. The company should be a US company. SoFi hits that box. They should have a capitalization of 11.8 billion. As of the bank charter news, they will hit that box as well. They should be highly liquid. They should have a public float of at least 10%. Yes, yes. And they should have 4 quarters of positive earnings. And now SoFi doesn't have that just yet, but they are expected to have that within 2022 because they just broke through or expected to break through consistently to being a profitable company. And so once this 5th criteria is met and SoFi has 4 quarters of positive EPS, essentially, then they can be eligible to enter the S&P 500. More realistically, it's going to happen in 2023 because they need 4 quarters and we just need that time to pass naturally. But SoFi, given their current trajectory, they're going to have that very easily, I think, especially with the bank charter. By the end of 2022 to the beginning of 2023, we could see SoFi being in discussions to enter the S&P 500. This is really huge because a lot of the biggest funds in the world, pension funds, hedge funds, they all invest in the index as a basket. And if SoFi is a part of that basket, then it just means massively bullish things moving forward. And just to back that point, if we use Lending Club as a blueprint for what happens after companies get a banking charter, Lending Club bank charter was approved on December 31st of 2020. And all throughout 2021, they more than 3x, 340% plus in 2021. You could argue that 2021 was a particularly special year for the company, but I would like to argue that 2021 wasn't a particularly great year. And in fact, much of this growth came as a result of the unlocks that were available from their bank charter. Now, let's go into the elephant in the room, which is that they're not allowed to trade crypto. You had a lot of articles here that came out with some FUD that they can launch a bank provided it doesn't touch crypto. This was interesting that these came out immediately because Brad here on Twitter, who apparently has Anthony Noto in his DMs, asked him, does SoFi Bank being prohibited from crypto activities mean that SoFi Money must stop offering the crypto services it today offers? And Anthony Noto highlighted that no, this is not the case. SoFi crypto activity is not done in the proposed SoFi Bank. It is done through SoFi Invest outside of the bank in what's called the bank holding company. So it's a completely separate entity that handles all of the crypto products. So it's business as usual for that entity because SoFi can still operate in the crypto space without necessarily being restricted by the bank charter. Yeah, they can't trade crypto within SoFi Bank, but outside of the bank, they can still continue their crypto product offerings. And just as a side note, I've made like 14 SoFi videos, 15 SoFi videos, and I still don't have Anthony Noto in my DMs. So for Anthony Noto, if you ever want to come and talk about SoFi on the podcast, absolutely happy to accommodate with that. Now, in conclusion, the bank charter is massively bullish news. It's what people have been waiting for a long time. Why? Because it unlocks the ability for SoFi to launch new products. New products plus the Super Bowl equals money for SoFi because you have eyeballs and you have new product offerings. The bank charter also increases SoFi's adjusted EBITDA. More adjusted EBITDA equals analyst upgrades. And also SoFi is cheap, considering their increased growth rates from the bank charter. And finally, they can still maintain their existing crypto products and they can introduce new crypto products through the SoFi Invest branch of their business. They are not limited with the bank charter stipulations for prohibiting crypto. That is just applying to SoFi Bank specifically, but SoFi has other entities within that umbrella where they can operate in the crypto space. So massively bullish news. I don't think the market is pricing this incorrectly. I mean, SoFi is up like 12 or 13% today, but the macro conditions have been really weighing heavily down on this one. I expect a very, very good year for SoFi in general in 2022 on the back of this charter, on the back of what it unlocks for the business. For right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.